Hello guys, today is a great day. Alibaba just reported earnings and I've just finished reading the earnings report and there are a lot to talk about. So in this video I will give you my key takeaways I got from reading the earnings report from Alibaba, and we will talk about the future prospects about Baba stock. So let's continue. I don't want this video to be too long, so I'm just trying to speak about the key takeaways I have. So, uh, in this earnings report, I do believe that that was not a good report for Alibaba. There are good things, but there are some things I do believe investors were expecting more. That's just my opinion. So, the revenue came for the this quarter. The revenue came 2% year on year, which is not a lot, but we have to bear in mind that this last year was a difficult year for Alibaba. So in terms of revenue, they came a little less of what was expected. They just reported 280 billion Chinese yuan, but they were expecting 210. Not a big miss, but still a miss. In terms of earnings per share, they were expecting 1.3. They were expecting 2.08, but their earnings per came with 1.34, another miss. But I do believe there are good things in there. Alibaba reported a positive profit for this fiscal year of 2023, which is a good thing. I do believe in that because we had a really bad year in 2022, and this last year it's a start of a growth and a profitable way for Alibaba stock. Another good thing for Alibaba stock, and that's I do believe it's the good news, is that they are expecting to spin off their cloud segment. They already talked about it, about spin off some sector of their company, but they announced their plans to spin off its cloud division as separate and doing an IPO, and they are expect to do a special dividend for the Alibaba shareholders in and give some Alibaba Cloud Intelligence Group shares. I do believe that's a good thing. I do believe they are trying to create shareholder value, and spinning off Alibaba Cloud sector that can improve a lot of value for Alibaba stocks. There are a lot of people, a lot of investors that do think when you do your valuation of Alibaba, if you do a sum up of the parts of the segments of Alibaba, you have a higher value for the Alibaba, and they do believe that's a good thing, and their cloud segment can have a really good premium. They can trade, they can have a valuation really high because it's a tech segment. They are growing a lot as well, so that can create a lot of shareholder value, I do believe. As a Alibaba shareholder, we have to decide what to do with the shares they will give us. But they intend to do the IPO and the special dividend during the next 12 months, so we have plenty of time to decide that. So I do believe that's the key takeaways. The business is not growing as expected. The China reopening is not doing well as expected. They are doing good. They are starting to grow again, and I do believe we'll have a better second half of this year for the Chinese stocks. I do believe this is a beginning, and I do believe that we can expect a lot for the next half of the year. So with these earnings, Baba stock is trading down. When I started reading the report, Baba stock was down 1%. After that, I was just looking into it. They were up 2%. At the moment, we are about to start the market today in 15 minutes, and the stock is up about 0.8. I don't know where we will trade. There are good news, bad news, but I do believe investors are starting to get bullish on the stocks. There were a lot of investors that reported their 13F saying that they were buying Baba, for example, Michael Burry. So one important thing I want to talk to you guys is that an earnings report, good or bad, doesn't change our long-term prospects of the company. Alibaba is still a really good company. I do believe everyone loves to have Alibaba shareholders. The only problem they have is that they are a Chinese company. It's really difficult to invest in a communist country. We don't know what to expect from that. Nevertheless, Alibaba is a really good company, well managed. They are doing a lot of buybacks. They reported that in the latest earnings as well. They have a lot of cash to invest in the company. They will do some special dividends in terms of shares. I will hope to have some Alibaba Cloud segment shares. That's good news. I do believe that's why the stock is up today, or if the stocks goes up today, it will be because of that good news. For the rest, they are it's a miss on the revenue and their earnings, but it's a small miss, and they are continuing to grow and turn their moment positive. So that's not bad news for me. That's my opinion. For the rest, that's a good company. We already talked about that. I have an intrinsic value of $120, and between 120 and 150, because I increased my margin of safety because it's a shiny stock. But I do believe their intrinsic value for most investors will be around $200, even $300. I have a lot of shares of Alibaba, but I will continue to hold Alibaba. I really like the stock. I know the risk. There are a lot of risk, but that's a company. I do believe that's a really good opportunity, and I do believe we will have a better second half. So I'm not gonna talk about valuation. We already talked about that in the latest video. It's my value for Alibaba. It's still the same. It's a good company. I really like. They are growing a lot. They are resuming growth, and I'm expecting that the next years will be good year for Alibaba and for Chinese stocks, because Chinese reopening, they will resume their growth. They have good margins for an e-commerce, and Alibaba is not just an e-commerce company. They have a lot of business, and we'll see some spin-offs of their segments, and that might increase shareholder value. They have no debt, a lot of cash. The return on invested capital has not been great, but they have been having bad years, and I do believe in the next years they will increase that. They have a wide moat. They have been free cash flow positive. They have returning capital to the shareholders, even though you think Chinese companies are not shareholder friendly, but they are doing a lot of buybacks. And in this earnings report, we have news that they will return some Alibaba Cloud segment shares to the shareholders when they do the IPO. They are expecting that in the next 12 months, and they have a fair valuation. I do believe Alibaba is really undervalued. So if we continue to grow, if Alibaba continues to do a lot of profits, to do buybacks, I do believe we can beat the market on this stock. So that's my key takeaways. That's my opinion on this latest earnings report. I hope you liked it, and if you liked it, please subscribe, guys. Bye.